If you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? Warren Buffett. Warren Buffett, the legendary investor, started voicing his opinions about Bitcoin back in early 2018. Since then, Bitcoin has soared by 400%, while Buffett's own Berkshire Hathaway has only risen by 75%. If Bitcoin is performing so well, why does Buffett, a titan of financial insight, have such a low opinion of it? Could he possibly be wrong? Let's find out. To grasp why someone might choose Bitcoin, consider a scenario. John is a 30-year-old in the US. It's 2020 and the country is under COVID lockdown. John has always been the responsible type, working hard since he was 18, avoiding parties, travel, and needless online shopping sprees. He saved up to $100,000 to buy a house and support his family. When the pandemic hits, he decides to play it safe and hold on to his cash until things stabilize, a move traditionally seen as wise. 3 years later, when John checks on his savings, he finds he could no longer afford the house he wanted. House prices have jumped by 37%, and even filling up his car costs twice as much as the $100,000 he's worked 12 years to save, now effectively worth only $70,000. All his hard work and savings have been eroded by what those in finance call the silent tax, a sneaky erosion of money's value happening worldwide. For instance, if John were living in Argentina and had saved the same amount in pesos, he'd be left with only $15,000 today due to severe inflation. This shows a major flaw in the traditional currencies, if only there was a better way. This is where Bitcoin enters the conversation, offering an alternative to those feeling the pinch of the silent tax. If you look back through history, you'll see that the issue of currency devaluation isn't a problem. It's been around for more than a century, affecting over 100 different currencies. Take the dollar, for example. It's been losing about 7 to 10% of its value every year for the past 100 years. Over a century, this means the dollar has lost 99% of its value. If you had $100 million back in 1900 and you invested it in just about any currency in the world, today you would find that your investment has nearly vanished in every currency except perhaps the dollar or the British pound. Every other currency has collapsed. Even though the US came out as the winner in most 20th century conflicts, the dollar still lost 99.5% of its value. Essentially, if you picked the wrong currency, your money evaporated. The crux of the problem is every traditional currency is the wrong choice to some degree because they all share a common issue. They're controlled by a central authority. This authority has the power to legally and silently reduce the value of the currency. But what if there was an alternative? What if there was a currency that wasn't controlled by any central power? This new possibility is what makes Bitcoin and other cryptocurrencies so fascinating. The real issue isn't with the idea of currency itself, but with who controls it, usually a central bank, like the Federal Reserve in the USA. The Fed has a particular habit of printing money. The downside, every time new money is printed, the value of the existing money in circulation drops. This devaluation means that people's savings in the bank lose their value over time, leaving savers at a disadvantage and those without savings struggling just as much. We've long accepted this cycle as just the way things are, but what if there's a solution? Here comes Satoshi Nakamoto, a mysterious figure whose identity remains unclear. We don't know if Satoshi was personally affected by inflation, lost faith in the financial system, or was simply an innovator looking for a challenge. What we do know is that Satoshi created Bitcoin. Launched in January 2009, Bitcoin was designed to address the flaws of traditional currencies. First, it's decentralized. No single authority controls it as its power is spread across millions of computers worldwide. This means even if a few get compromised, the network remains secure. Second, there's a cap on the number of coins, 21 million to be exact, which protects against inflation. Third, unlike gold, Bitcoin can be transferred instantly with just the click of a button, making it a highly convenient and powerful tool for modern finance. This innovative design aims to make sure that people aren't left penniless by forces outside their control. If you wanted to move your wealth to a new country because your current one has become too corrupt or crime-ridden, with Bitcoin you could easily transfer your funds anywhere in the world with just a few clicks. Or if you prefer to keep things really secure, just memorize your private key password and your entire net worth could essentially be stored in your mind. It sounds like a revolutionary tool, right? So why does Warren Buffett, a giant in the investment world, have such a dislike for it? To understand his perspective, we need to go right into his mind. Back in January 2011, Buffett was gearing up to make a significant investment. He had identified a company that matched his investment philosophy, a philosophy centered around buying stocks at a reasonable price from companies whose cash flow would not only repay the investment quickly, but continue providing income for years. This approach has served him well over the decades. He decided to buy 55 million shares of IBM, a company that has just reported $15 billion in income and boasted a market cap of $200 billion. If all went as planned, this investment would quickly pay back its cost and then turn into a steady source of cash for Buffett. Buffett's strategy is to avoid what he considers speculation, investing in assets that don't produce substantial returns in the hope that they will be valuable in the future. He sees this as too risky, especially since his ultimate fear is losing his shareholders' money, possibly even more than losing his own. So when Bitcoin came along, a non-physical currency, not commonly used in everyday transactions and entirely digital, it didn't fit with the bounds of his investment framework. To Buffett, Bitcoin represents the kind of speculative gamble he prefers to avoid. He has also labeled Bitcoin as evil, and while it might seem odd to say that about a currency, there's a reason behind his statement. Bitcoin isn't just popular among those seeking financial freedom from traditional systems, it's also gained notoriety as a favorite among criminals, which is highly concerning. Consider this scenario. An illegal weapons manufacturer makes a multi-million-dollar sale. Normally, depositing this money into a bank would be risky. Banks have stringent regulations, require identity verification, and can report suspicious activity, potentially leading to frozen accounts or legal troubles. But with Bitcoin, you can send the money to a Bitcoin address, remain anonymous, and keep the transactions relatively hidden. Although all Bitcoin transactions are recorded on the blockchain, the identities of those involved are not readily traceable. This anonymity is Bitcoin's double-edged sword. It's what makes it so appealing for both legitimate privacy seekers and those with ill intentions. This brings us to a critical question: how much freedom is too much? When we champion financial liberty, we're also inadvertently making it easier for criminals to operate undetected. Buffett's criticism comes from this dilemma. The freedom that makes Bitcoin attractive is also what potentially makes it dangerous. The success of Bitcoin is unique compared to other assets. With more assets, their value isn't solely dependent on demand. If nobody wants your Bitcoin, it essentially has no value. On the other hand, if everyone wants it, its value can skyrocket. This dependency on demand is why Bitcoin owners often vocally promote it. They're not just sharing their success, they need others to join in to drive the price up. This includes big players like institutions, hedge funds, and even governments. Think about it. China has shifted from holding US dollars to gold, but what if they decided to invest heavily in Bitcoin? Currently, Bitcoin's market cap is around $700 billion. Gold, another asset class known as store of value, has a market cap of around $11 trillion. If Bitcoin were to reach the same market cap as gold, its value could potentially increase 15-fold. And if it's considered better than gold, maybe double gold's market value, which means a 30-fold increase, but that's an extremely bullish scenario. Remember, gold has been a trusted store of value for centuries, whereas Bitcoin has been around for just over a decade. However, not all is smooth sailing. Bitcoin has faced its share of setbacks, like in May 2021 when Elon Musk's Tesla stopped accepting it as payment, not because it isn't a symbol of financial freedom, but due to concerns over its environmental impact. Bitcoin's energy usage is substantial, stemming from the computational power needed for mining and transactions. According to a calculation by the Harvard Business Review, Bitcoin uses about 110 terawatt-hours of electricity annually. That's 0.55% of the global electricity output, roughly equivalent to what countries like Malaysia or Sweden use. That's a significant environmental impact. On top of that, Bitcoin has slow transactions, annoying fees, and the kind of volatility that can make your heart skip. Just ask the folks in El Salvador. El Salvador took the bold step of adopting Bitcoin as its official currency in September 2021, aiming for widespread usage. However, by late 2023, it's still rare to see businesses or individuals using the cryptocurrency regularly. Its slow transaction times and extreme price fluctuations make it a risky choice for holding savings. 1 month, your investment can shrink by 20%, and the next it could soar by the same margin. These attributes add to the inherent pains of using Bitcoin as an everyday currency. This paints a gloomy picture of Bitcoin's viability, suggesting it could potentially crash to zero, though it's a tough prediction to make. The financial world is currently experiencing a significant divide over Bitcoin, reminiscent of a political left-right battle. The new financial influencers champion the potential benefits of adopting this new system, while the transactionalists view it as nothing short of financial peril, some even dubbing it rat poison. Unlike typical political debates with Bitcoin, it seems there might be a middle ground. This digital currency, which you can't see, touch, or control, might either solve the age-old problem of unreliable fiat currencies or ironically harm those it aims to protect. The debate continues as each side presents compelling arguments for and against this enigmatic currency. Don't forget to like, share, and subscribe to Economy Obsession for more insightful videos, and we'll be back soon.